Hi, you're here for episode 7 of our podcast here. I'm with Cat Dizon from Active Capital, one of our venture capital leaders here in San Antonio. Cat, thanks for being here with us.
Thank you for having me, Matt.
So we're going to talk about some great things today. I'm really, really excited. In fact, we're going to break this up. This is going to be a part 1 and a part 2. And for part 1, we're going to talk a lot about your journey to become a venture capital list here in our community, which I think is it's an amazing story. And then 2, really about our venture capital community. With just want everybody to know, you're going to be talking towards the end of this about really what venture capitalists look for, those top 3 things that venture capitalists are looking for in a startup. And then part 2, which we'll get to, is going to be a lot about what you're doing in the community with women founders, Latina founders, which I'm super excited about today. So it's going to be a great episode. Again, thank you so much for being here. I wanted to start off and talk about what it was, how your journey to become a venture capitalist, because there's been a lot of you've been in the news a lot. It's just been fantastic to see it, but I don't think really people understand your journey, which was a non-traditional journey to get to where you are today. Can you walk us through that journey?
Yeah, absolutely. So growing up in Corpus Christi, Texas, born and raised, I was an athlete growing up, so very competitive, and just took that competitive and this type of fairness spirit with me. Decided to move up to San Antonio for college. Went to the University of Texas in San Antonio. Wanted to be an attorney, doing criminal law, if you can imagine. I loved law. I loved the right from wrong, the fairness, and just making sure that that's passed on to folks that possibly make a mistake, make sure that they're absolutely treated fair in the judicial system. So going to college, as most kids do, they take jobs to put themselves through college, and I decided to start early and start getting into business. And by age 20, I was an operator running a local business. And by
age 20, you just say it so casually. By age 20, I was running a business. At 20 years old, you can't even drink yet, but you are, this is where the story comes in. It's fantastic. Sorry, I didn't mean to interrupt.
Yeah.
But just casually say it. It's like, it's 20 years old.
So did not expect my journey to already take a pivot, but realized I was built for business. I loved the sense of process, operations, and started just moving up into leadership position at a local salon and day spa. I didn't do hair, I didn't do nails, I just ran the business, and started to get really good at understanding how it all worked. And we decided to get into some property management, so became a landlord and did that for a little bit along with the salon and spa. And then in 2003, we decided to also open up a restaurant, because why not? It's business. We were good at it. And so already at a very early age, I started looking at different industry types and the business operations and the business impact, and already starting to build up expertise at a very young age. Very young age.
What was fascinating, and people know we talk about these things ahead of time, so you had told me that story, was the diversified of the industries you were in at age 20 as a leader, which people don't understand. Business is business, widgets are widgets, but being able to adapt industry to industry is not for the faint of heart. It's still very, very difficult to do. But your training, your road led you at 20 years old into a restaurant, which, people say it's like buying a boat, essentially. The day you buy it, you regret you did, even though I've got a boat, I've got a restaurant. Hair and day spas, we see a lot of that out there. That's great. And then property management. Dealing with, tenants as a landlord and all the headaches that come at 2 a.m. and everything. What a wide variety there. Tell me, what ultimately stopped you from going into law? I'm just curious as a lawyer. I'm glad that it did. And I do encourage people to not become lawyers. That may be a weird thing. Yeah. But what was it for you? What stopped you? Was it the experience, or was there something else?
I realized very quickly that I truly enjoyed business aspect. Even though I love the law, I still see a lot of law where I'm at with regard to contracts and mergers. And my favorite partner in most businesses is the lawyer, because I still get close enough. But I think, just as I started to graduate, getting prepared to take the LSAT, my mentors were saying, Kat, you're already in your career and you've done so much in the first 4 or 5 years of it. Aren't you curious? And I thought, well, And then working with my partner at the time, he said, you know what, just you can go to law school, but why don't we just open up one more business and let's just expand. And of course it just keeps building and your experience keeps building. And then it got to the point where that love is still there, but it wasn't my driving force anymore. It was really being part of the business and growing them, scaling them, and just watching them succeed was just, I started to have a new love and new passion.
So what was that last business?
So the last business before I left was the restaurant gave me a different perspective overall, and you nailed it. Restaurant Live, I have so much respect for those that can open up and run. It's an animal in itself. And when I walked away from that particular group of investors and businesses, I thought I wanted to start new, and I took a brand new search into a new industry, and I moved into manufacturing, and I lasted a year. Because
you lasted a year.
While I love business, there's certain components in business that I don't see the value. I see the value, I just don't get fulfilled with. And I have identified early on that manufacturing is just not where it is for me.
That's interesting because, the way I look at restaurants is almost like manufacturing, right? It's just in time inventory, your inventory spoiling left and right. You got HR issues all over the place.
Yes.
But manufacturing, you're right. It's just the throughput and looking at bottlenecks and stuff. It's necessary to understand it, but I'm with you. How sexy can it be to be really dealing with, did you put that one component on correctly in quality control? Sorry, no offense to those in manufacturing. You're vital, but I get it.
But I need that personal touch. I need that. There was something missing with manufacturing in me, and I think it was just logistics. I learned a lot. I still use some of those items today when working with something that has a component of hardware. But for the most part, it's just there was a lot left to be desired for me.
So a couple of questions for this early part of your career that, again, is just an amazing. Did you ever get an MBA?
No, okay. I had thoughts about it.
But that's better than any MBA. As a person that has an MBA and a master's in finance, honestly, you got a lot better education than my alma mater, University of Alabama, which I love dearly, but you still got a better education than any MBA, that I know of that you could go through. So I didn't figure you had, and maybe we can go on a tangent about how MBAs are just a piece of paper anyway, like the other ones y'all see on the wall. But what was the biggest lesson you learned as an entrepreneur early on in your career?
The biggest lesson was, as a very young entrepreneur, as a Hispanic female operator, I had to take up a lot of space in meetings, in decision-making situations where I felt I was building up incredible experience. I had background. I research everything. I'm always prepared. And I recognized early on that if I am not vocal and active, I may be passed over, or things may take off without me. And being part of that competitive drive growing up, I always wanted to be a part of it, whatever that it is. And building my voice at a very young age in leadership and executive roles was very important to get me past additional levels, hurdles, and obstacles that came my way throughout my career.
Define for me fill up space. I think I know what you mean, but I want to hear how you define it.
Yes, always having an opinion, making sure you make the stance, and it matters. Make sure it matters to you, because one thing I realized is I was starting to already build up my business acumen and reputation. And once you stay silent on an issue, people think you agree or you have no opinion. And I saw it around me with those that just never really spoke up. They didn't seem to move on, right? So people think you're okay. You must be okay with this. You must be okay with that. If you're truly not, or you feel like you can contribute, you have to have that voice in the room. And because I did that at a very early age, I am confident going into any room and being able to contribute, regardless even if it's just the branding on the outside of the building is all I can really contribute to this meeting walking in. I'm going to do it because I've got that confidence. And I've seen it, been there, done that. And whatever situation I walked into, I want to add the value. I want to have a print on something to be contributing. And I feel like looking around the table throughout my career, not everybody does that. And I think that
most people are
passes people by.
Silent, or they're yes people. What I think is impressive though is that's why I wanted you to define fill up space, is a lot of times it's very rare to find someone that's going to fill up space by adding value. Mm-hmm. You get a lot of people that will fill up space in any organization with opinions that they want to have become the actual truth, or they want that to be the decision. They're looking for control versus adding value. And I think that's just a really important distinction, is what you just said was you're filling up space by contributing value, right, and always being able to do the value, which is desperately needed in any organization. To be able to make better decisions. What about as far as your early career, and we'll talk more about the women founders, but as a woman, was there any, for those that may be listening that are early in their career, that they're in their 20s, females saying, oh, it's tough, how do I find my space? Do you have any advice that you learned from that early part of your career as a woman trying to get into business?
Yes. Use strong language.
Ooh.
Be very confident in your speech and what you're sharing, because the moment you show hesitation, we tend to start being unsure of ourselves and maybe questioning what we're championing or what we have an opinion on. So when I speak, I make sure I am showing my confidence. I am preparing you for my thoughts and making sure that it lands and it's delivered with a solid punch. And I think doing that, you'll capture the room a lot better. People will give you a little bit more attention because you are definitive in your opinions. And I think a lot of people kind of go back and forth where you don't often see that. So if I state something, I'm usually going to bet on myself and say, okay, prove me wrong then.
Right.
And folks are not usually ready to.
But you've done your homework. I mean, you mentioned earlier here, you research everything, right? So, I mean, you can have a couple people question the validity of your facts surrounding your opinion and realize, wow, she's done that, or he's done that research. Right. Then that gives you credibility. And then once you have that credibility, you can leverage it.
Right.
Talk to me how that manufacturing job leads you to Rackspace.
So I realized shortly after, not even a year, that I was ready to do something else. I wanted to do something again, brand new. And I happened to have a friend who was working at a local tech firm and said, Cat, I think you just need to apply. And I said, well, I do a lot of different things, but I've never been technical ever. And he said, that's okay. It's a growing company. Just apply. They're going to find you something. You have so much knowledge, business. You're an overachiever. You're competitive. We love all that. And I interviewed and I started Rackspace in 2005. Brand new, zero technical skill set. And by under a year, I was leading a technical team full of sales reps and technicians. And it was probably one of the hardest parts of the tech side of the house. It was open source, which is not the easiest kind of communication language in the space. But again, as a researcher, as a learner, as a student, quickly got up to speed. Business is business. Now it's the technical component that has to be learned. So it was a very challenging first year, but after that, things started opening up for me in a different way.
What would you give the advice to those that are entering into a new environment like that? Whether it's I'm fresh out of college, moving in, I'm just joining my first technical team, or I'm making a change. A lot of people have decided with COVID and whatever career paths. I mean, actually people do that generally in life. So you know what, we're talking about this today. What's some advice that you would give someone going into a new environment that they're not familiar with? What's that key thing to keep in mind, or what's that advice?
I would say set personal, realistic goals for yourself. And if you're going into a brand new industry, do your research. Who is leading that industry? Who is local to you, possibly in your network, that you can start really just picking their brain and absorbing as much as you can. If there are any courses, I still take courses today just to get better in what I do, but constantly be learning and get really proficient to a point and then master it. And I think everyone can appreciate someone who's coming in brand new, that has the willingness to learn, that has the willingness to spend personal time to sharpen that skill set and then really own it and master it, and then coach others along the way that are just starting their journey for the first time. And I encourage anyone, whoever's ready for a jump, tech is always looking, it's growing, everything has an underlying technical component to it these days. So again, it's not going away, it's only getting greater, and there's so much advancement, but yet there's so much ability to be a part of that growing stage. So regardless if you have some technical skill set or zero, it's always, it's just something new to learn.
What have you seen from the tech industry? Is the tech industry and community really tightening down with regard to, well, we have our own culture and you're either in and you're out, or you see it because of this proliferation of, digital everywhere? Your vacuum cleaner, Dyson just had their new vacuum cleaner that talked to Alexa, I think I saw. Everything's got these digital components to it. We're getting to the Jetson age where there's an open community. Talk about just in your experience now being with tech for many, many years, really as this has come to become our reality with this proliferation. How is the tech community? Is it easy to get into? Is it a challenge?
I think there are a lot of resources out there, coding academies and efforts that will just offer the training, but also think about it. Your kids are probably better suited for the technical age than you are. My daughter's 8 and she is fantastically so proficient online, on devices, brand new devices that she's never dealt with before. She'll figure it out. And it's amazing and it's exciting because now all the technical advancements are just so far ahead of its time because the engineers and the entrepreneurs are getting younger and younger.
Right.
So to me, it's never too late to jump in, and there's so many different areas. It's still a business. There's still areas in marketing. There's still sales. Once you understand the underlying component of the technological aspect,
right,
there's still room for everyone to play in. And I feel like San Antonio is well known for its tech community. It's growing, it's building. We have a success story of Rackspace. We have the byproduct of Rackspace with all the other startups that are really starting to see some scale and growth in the last few years because that culture, the building, the advancement, and just kind of bringing everybody along into it, I think is really starting to open up opportunities that folks maybe 2-3 years ago never saw themselves in technology that are now starting to wonder what if.
So talk about Rackspace in your career, because your career continued to progress all the way to doing M&A, and integration, everything. Talk more about that time period there at Rackspace.
So everyone has heard different variations of Rackspace stories. Mine is no different. Came in through the technical side of the house. Me being the process person I am, I moved into compliance for a little bit.
God bless you.
I loved it. I loved learning because it taught me so much about what Rackspace does, how we serve our customers.
So you did get to be a little bit of a lawyer right
Exactly.
there.
I get my glimpses when I can. And then for almost 5 years, I was the first incident commander at Rackspace. So I handled all the enterprise incident management and crisis communication situations for a globally, publicly traded company that ran globally. And with that comes with knowing every aspect of the business and being there to help us kind of move forward during impact and seeing the way our leadership team, our middle management, and our frontline rackers all work together during situations. You just learn so much about people. And I'm a people person. And I think that's why certain industries like manufacturing, I was missing that personal touch, right? That service, that level, that loving on the customer and building things and watching it being built. So great time. Moved into a few other roles and then put those skill sets together, how businesses ran, technology, love to be a people person, and then trying to grow Rackspace's portfolio, we quickly found out that mergers and acquisitions was one way to really grow and scale Rackspace.
Right.
And our offering to customers. So, hit the road and started kind of looking into founder communities to try to find that next startup that could potentially be a perfect match for Rackspace to really enhance our services. So one, being able to assess really early stage tech, the founders, the culture, and finding those perfect matches for Rackspace.
Now, were y'all looking, I guess you were working on the entire continuum for those that were maybe pre-seed, or did you have some sort of criteria where you're looking for those that were mature models? Was it a mixture?
We were hoping for the really early startups, ones that really had the technology, but that we could have them come into Rackspace and utilize the sales engine, the marketing engine, grow, maybe be in addition to or somehow integrate with whatever Rackspace already had built in that space. So really it was early stage that we really wanted to take a look at. Plus we wanted to see those hungry founders that we know could totally identify with the Rackspace culture of just constant building and scaling and growing.
That's fascinating, because a lot of, more mature companies are looking for those. Oh, we'll buy them, and then through integration savings, right, we're going to unlock value because we'll get rid of their sales or move them in. But you guys were really looking for the leading edge.
Yeah, during my time. And I do believe further down the road for Rackspace's history of acquisitions, I do believe they became more established. But during my period, we were just getting started. We were just getting used to the M&A activity. And it was just great visibility into those communities, the techs, the entrepreneurs, and really just kind of what we call, startup space and startup speed. It's very attractive for those that really want some advanced technology very quickly.
Well, it's innovation. It's like you're surrounding yourself by innovation every single day. That's always exciting.
That's right.
It can always be a little frustrating being around innovation, but it's always exciting. So we've got the Rackspace. I mean, again, now you're hitting that perfect storm of looking at all these companies using the platform of Rackspace to go and find that value, unlock it by bringing in. How did this move into Active Capital where you are today?
So I left Rackspace in 2017, and I had made a really good relationship with a partner and my former boss at Rackspace, Pat Matthews, and we got together shortly after that and just said, what's our favorite parts of our career at Rackspace, and how do we continue to work together? And my favorite part was these acquisitions, these working with these startups and these founders that had amazing ideas, and we were there for their big day of acquisition, but like what if they did more, and what if they continued to build independently? And we kind of put our heads together and just said, why don't we chase that, and instead of acquiring them, let's invest in them and scale them and grow them. He is a true entrepreneur. He was the first acquisition of Rackspace, so he had that entrepreneurial mindset. Me, I'm a true operator. Give me something that's in the middle, and I'm going to refine it. I'm going to make this work and grow it and scale it and make more efficiencies come true for them, and just kind of put those two sweet spots together. And we started Active Capital in the fall of 2017, or actually in the spring of 2017, and we took off from there.
So tell me a bit more about Active Capital. People talk about venture capitals. What's your thesis? Again, everything's in language, and that tends to be a buzzword that you hear. I think more of what's your purpose, what's your mission, those sort of things. What's Active Capital's mission? What's your thesis for that?
So our mission is we are founders and operators, and we want to support, grow, and scale founders and operators. And we focus on pre-seed, seed stage SaaS technology startups. Sometimes we dabble in Series A and B if the deal is right, but for the most part, we're looking for a founding team, and that's building some tech that is very compelling, maybe disruptive, or just something we just have not seen. Its market is not really important. We want to make sure that it is in a market that is ripe for growth. We will invest anywhere. So whether they're Texas-based, US-based, or just international, as long as it is in our realm and we can be more to them beyond the capital. We are truly active investors. We want to be real partners on the journey. Some founders like that. Some founders probably are not looking for.
They just want your pay. They want your check, and then they want to be left alone for some of them.
Exactly. But I think the best way to match us up is with a group that's looking for a true partner. And given our background and what we've seen and our expertise, that's what we look for is finding those matches that are in those stages and in a market that's right for them.
Now you've currently got, I may have this wrong, is it like 80 portfolio companies?
Yeah.
Do you find a key theme around your portfolio companies? I've talked to venture capital folks before, and you typically have a couple of different buckets. You've got the ones that are young in the process, have high growth potential. You've got some that, maybe need a little bit more hands-on to get them a little bit the ship in the right direction than you anticipate it. So I know you have all these buckets, but if you look across your entire 85, do you see a key culture, key theme, key, aspect of those businesses that y'all are investing in?
So I would say the earlier we meet them, the better.
Okay.
Because we usually like to do a seed investment, smaller investment check could be anywhere from 100,000 to 250,000.
Okay.
We are built to lead seed rounds, but if we find you sooner than that, we find that strengthens the relationship early on to where we tend to have the ability to really work with you when you're starting to make those critical decisions. If we meet you already in full, flow, there's not a whole lot we can offer you, even though we still want to build that relationship. But we're finding the most successful directional work that we're doing, it tends to be when we first meet them early on. And I think that's going to be our signature going forward, is we're trying to get into earlier conversations in relationships to help them navigate their seed stages.
So when you talk about early, because I have conversations with founders all the time, are you talking, we need to raise money, we've got a proof, how do we raise money, bring y'all in? Because questions I get are, well, how much equity should we give? And what's the proper valuation? And what's the right way to stagger our, our fundraising efforts around our strategy and our business plan? Is that what you're talking about? Or just early on in the capital raising campaign to have that? Where do they need to find you?
Early on in the capital raising campaign, we want to be the first million that you take in.
Got it.
And some companies that we talk to, they're beyond that. And even though it's a really good fit, we just want to be early money in, showing our value to you on the just immediately when it starts, so that we make sure that it's a great working partnership, and we're having success that way. So
Right.
I would say first million in, a working product, and you have some sort of traction, whether that is revenue, whether that is waitlist, whether that is just proof models. What's getting you excited to believe this is going to take off, and then get us equally excited to be a part of that would be
Wow,
the conversation.
That's fascinating. I was just with somebody the other day that was like, no, just go for later stage. Just go for a later stage. Wait, it's a whole lot better when you go for a later stage. I'm like, well, wait a minute. I mean, the earlier you get in, sure, you're going to have some that don't make it, but there's a lot of value being early in to get involved on the ground floor, so to speak,
Yes.
versus, floor 1, 2, 3, or, 100. So that's fascinating. What's some advice to a startup or founder with regard to making that decision for how much money they raise? What are some of maybe the top 3 factors when doing fundraising that they need to consider in doing that?
They need to do a cap table exercise. They need to see what they will be giving up to take in that cash, and how much dilution they're prepared to take. And dilution is when you start to give away percentage of your business, and you are working so hard to build it up that, operators, maybe it's great to be part of a really strong raise or a high raise, but you lose parts of your company with each raise. So it needs to be really meaningful, taking in that cash, and really have a good plan of what you're going to turn that cash into, whether it's additional revenue, whether it's, scaling the team. There's got to be some key positions that you either fill, or some true milestones that you're going to reach with that capital to make it worth taking on additional.
So when you say the cap table exercise, are you talking, don't just look at this capital raise, but look at, the next 2 to 3?
Yes.
Because I find that some, entrepreneurs I talk to, they're like, well, I just need $2 million. And it's like, okay, well, as an investor, what do I get for that $2 million? I mean, I buy what I've got today, but when that $2 million is gone, what will I have?
Right.
And they're always like, Well, I've never thought about it that way. I just need $2 million to get to this next point. Is that what you're talking about, is to look further down the road, or just do it today?
I talk with entrepreneurs and they say, well, I'm going to do a safe note. Great.
Right.
Safe note round, which is on paper, which is a promise. It's not really giving away. Well, eventually that's gonna come due.
Right.
And what you do is, you're the founder, you're the owner, and you own 100% today.
Right.
But with each raise, with each round, and as things convert and mature,
right,
you're giving up 20%, you're giving up 15%, you're giving up portions where that 100% now is to 80%. And then with the next raise, it's going to be 60%. So you do the math of where you believe you want to take this company, but also what do you want to own?
Right.
And is it worth it to you? Because some folks will rather take on a debt, vehicle rather than giving away parts of the business. And depending on your business, that's usually a better move.
Right.
But again, if you are in an industry where investors are looking at you, it's a very enticing conversation. So I would say do the math, and while you're excited about what you can actually take on, what will you do with it, and is it worth it? And if the answer is yes, then you move on to stage 2 of, okay, what does it really mean in the details of things? But really understand what you're giving up with each raise that is conducted.
And it's hard for people to do. I mean, we even have a current client on a convertible note, and I'm like, okay, well, this is non-dilutive to us. I'm like, well, it's convertible. Right. So the question is, when you need your millions and you're going to have to essentially give them their money back at the rate, or else they're going to convert, how are you going to do that? Oh, well, I never thought about that.
Yeah.
So again, thinking longer term.
Or if they call the note. I mean,
right.
There could be a point where the investor says, I just want my money back. Will the company be in the position to do so?
That's right. And that was going to get me to, I guess, another question I had for you as we go down this line of topic is team. Mm-hmm. We've got a lot of great idea folks in this community. I've seen a lot. I mean, we've gone through a lot of the pitch, competitions and stuff. There's an amazing amount of ideas out there. There's some people that have great, just amazing vision. What are those key, when you're doing a fundraise and as a VC looking at the team, what are the key elements you're looking for as far as the team that you're going to invest in?
So one, we try to identify everybody's strength on the team and what they bring. Are they in the right seat? Are they doing the right role? And that's the part where we'd like to get to know them a lot earlier and see how they interact and how they come through decisions and just really how they work. And, some of these investments go very quickly because we're on the clock, or there's, they're oversubscribed, or there's a lot to it. But we put a lot of emphasis on just the team makeup and just how do we believe each of them are on the right team in the right seat to make this work and to scale and to grow. And if not, we start those conversations early.
Do you look for a finance person on the team, or do you just look for a strong operator? I mean, because a lot of these conversations about cash flow and dilution, founders are like, well, I've got this great technology that does this. And, you see them come into Shark Tank too.
Yeah.
It's another one.
Yeah.
Everybody goes in, they come in, they're like, Mark Cuban, we're going to give you, we want, $200,000 for 5% of the company. And then Mark runs through it all and gets 60% of the company for $100,000. So do they need a financial person? Is that something it's a red flag for y'all? Do they need a strong operator? What are you looking for as far as a team makeup?
As far as the team makeup, they need to know their industry and what problem they're solving for and the customer type that they're servicing. Really, all those other things, we can help them. Right. We encourage them to get a firm. We encourage them to find their lawyer. But as far as the team and what they need to bring is they need to be very clear on what problem they're solving for, what they've built is solving for it, and exactly who is your customer. And if you tell me everyone's or could be a customer already, we know that you don't know your space. Right. So it's really just the confidence. And most entrepreneurs have a personal story of why they're so passionate. They have a vision of where they want to take it. And that's what we want to know is it a product or is it a true service? Is it a growth company that you can actually continue that vision? Because if it's just a product, not really exciting for us, not really something we want to jump into unless there's more than just that one piece of widget that works, right?
Right.
And the team to do that is also very important, because if you have a fantastic product, that's great. But if you don't have a team that knows what to do with it and how to get it out to market and how to grow it and scale it and service it, it's no use. I mean, it's not going to be good no matter how great the tech is.
Well, and I see a lot of founders. I've had conversations with founders about who do I need on the team, because a lot of people, they're like, well, how do I give out equity? Like, who needs to be a partner? And some of the greatest advice I got early on in my life actually was, if somebody's bringing value, then that's great. And what I'm just hearing from you now is value as far as your startup is helping with your product, your vision, and then executing on that vision. Yeah. The support staff, that can come.
Absolutely.
That's not something you necessarily need to be like, well, I need to, check the box and have an accountant, here's 10% of the company, or check the box, here's the lawyer, here's 10% of the company. Get your core business right, and then the rest can come. Those are services you can buy. You don't need to actually have them on day one, which some people think they do. They think they need to have all the team or else they're not going to be taken serious. That's not the case.
That's true. And then I guess one of the most important things is to be able to tell your story, because you really have to draw in those investors and have them really live the experience and live the mission. But if you can't tell the story and really hit the points that resonate with investors, it's not going to work. So again, you can have all these great components. You could be as technical as you want. You have a great understanding, but if you can't articulate it or translate it into what it means as far as your story, you're going to fall short.
And it's not an easy thing to do.
No, it's very, very hard.
It's not. I admire people that go through the journey and get all the feedback, and it's like everybody's poking holes at your story, and it's like, okay, this is not as easy as you would think it is because of time constraints and clarity and those things, but the exercise is so valuable.
Oh, and the audience is so important.
Absolutely.
What you would tell to sell a customer is something a little different than you would tell to sell an investor. And when founders figure that out, the story becomes easier. The mission, everything that matters comes to the forefront in that story.
Right.
Same thing with the customer. Once you know who that customer is, everything falls into place. It's getting there. That's the work that has to be put in.
So there's not just the financial journey. There's just the journey of maturing a business.
That's right.
Let's talk a little bit about the San Antonio venture capital community, fundraising community. We were just with last week, Sebastian at Alamo Angels talking about, he had a great, talking about just the life cycle of fundraising with what he called the 3 Fs, which is, out there, but it's, friends, family, and fools. We talked about getting into the valley of death, where you run out of money. I mean, that's just the reality is great ideas take money to operationalize. And if you're not a good steward of that money, and you can find yourself basically out of cash and in a boat that's sinking down. And so we talked a lot about angel investing, what angels look like. Give us a better idea of venture capital, what that looks like for a young entrepreneur in their life cycle. You guys are doing you're a little bit lower into the seed rounds than some other venture capitals, which will be into the Series A's round. But talk a little bit about what San Antonio has to offer for venture capital for somebody that maybe got some friends and family money, maybe a little bit of angel money, but they need more in their cash. Where are they looking around San Antonio for that next level of support?
Okay. So first, starting off with venture capital. Venture capital we're basically professional investors. So we take accredited investors' investment and they put it into our funds, and then we go out and start to build them a portfolio of investments. So when we talk to our investors, we give a specific criteria of what we look for. And it is going to be SaaS technology because that's our sweet spot. It's going to be early stage because that's where we can really help set them on a trajectory and help guide them growing into their potential, into their growth, and then getting them to that next healthy stage to hitting the next level of milestones. So when we talk to our prospects as far as an investment, we let them know, this is our criteria. How do you fit? Where do you match up? Why are you excited of what you're doing today? And can you see yourself really scaling and grow to be able to have an outsized return for our investors? Right. So really kind of tell them, we're a business, but we're also your investors. We want to be your partners and we can be your advisors. So based on that, what are you doing? And what do you need besides capital to help you grow? That way we can start shaping up whether or not it's the partnership. As far as the San Antonio landscape, there are a lot of opportunities, and we do invest alongside angels and rounds. So it's almost hand in hand as our community starts to really build up with additional investors, additional institutional funds. We're giving our entrepreneurs more opportunities to secure capital. And whether it is more through the angel approach or through a VC side, but VCs, we expect some real strong metrics to come through after post investment. And that's the part where we let our founders know, okay, here's where we take off. The clock starts now, and we need to start really seeing some climb and some growth. So we start building in the expectation level. We're in contact with our founders constantly just to make sure we're keeping abreast of what's going on, helping guide them as we need to. And then every firm is different. So you may have two firms. One is very active and one is just going to hear from you once a quarter, which is very standard for a lot of VC firms, is they just want to check out your financial status and move forward, and we'll hear from you next year. Whereas active, we're just very active, is we just want to make sure we know everything we need to know. And when there are some bumps in the road or some celebratory periods where we could jump in and celebrate with you, we definitely want to be a part of that. And we find that the founders are very appreciative of having that phone call that they can make when they're in the middle of making a major decision.
Well, I mean, look at that robust history you have. I mean, Pat's story with, his company, both pre and post acquisition with Rackspace. I mean, y'all are mentors, advisors in a variety of aspects, I'm sure, for these companies that can be very valuable when you feel like you're all by yourself.
Yep.
In a really small hole, trying to, get your widget and your stuff going while the rest of the world is out there moving. You feel like you're a little alone, with some pressure on you too, because I mean, again, once you get the cash, it's time to get somebody a return on there. Yeah. In San Antonio, we've talked a little bit offline about centralized, having one big group of investment community here in the venture capital, or whether it's angel venture capital, or a more diversified approach. What are your thoughts on, having more individual funds that are out there? And then what are some of those that are out there that maybe people don't know, or resources, be it in the angel or even in the VC world here for San Antonio communities?
Yeah, my position, I love additional capital sources. I would prefer to have more than fewer. And the reason is because every entrepreneur is special, and something makes them special, whether they are a female entrepreneur that's just getting started. There are groups that are just looking to invest in female-led companies. If you're a veteran, there are some, accelerator boot camps. There are some funding mechanisms specific because you're bringing not only your idea of business, but your experience, being in the military, growing in other ways in your background brings you to be just a special entrepreneur. Find out what that is and find out which groups really appreciate that and want to invest in those types of career paths and those special, unique features in an entrepreneur. And I'm so proud to see San Antonio continuing to celebrate incoming institutes that want to be a part of San Antonio's investing community. And just in the last year, we've had a new VC firm go up, MGV Group Capital, that they're starting to get into the game and make investments, which did not happen a year ago. We have Notley Ventures out of Austin, who has now set up a San Antonio chapter. They have fellowships for the founder side. They have Beam Angel Network that solely focuses on female founders. And then we have area focus, where BCAN is, I'm sure was touched on previously, but they are the Kendall County Angel Group, which they will invest in entrepreneurs based in that location of town. They want you to grow and stay and scale, and they're going to support you, and their investors are going to back your ideas, which is fantastic. It happens to be right in your own neighborhood. So I think we're coming up with more ways of supporting, and it allows an entrepreneur to figure out where they best suit, who they best match with, and they have options on what to do next and how to grow their business.
So this, we're going to be getting close to the end of this part one, which has been fantastic. But at the beginning, we talked about, leaving some wisdom for the people that be listening here. What are those top 3 things that founders should be thinking for as we go into 2022? 2021 is, it's Thanksgiving.
Yeah.
And when it's Thanksgiving, it means it's already Christmas. I mean, my neighbor's got his Christmas tree up. I think he's had it for a week. So, it's pretty much over for 2021. What are those top 3 things that founders need to be thinking about going forward into 2022?
If the plan is to raise capital in 2022, be thoughtful and do your research on every source that's in your area, because I think you have more options than maybe you're aware of. And, taking investment is very personal. You're bringing somebody into your company, and they're going to be invested, right? They're going to make sure that they want to see things from the company, make sure that's the absolute right partner. Because talking with founders, sometimes the investor that they've selected is probably not the partner that they would have selected down the road, and it's very hard to get out of that situation once it happens. Two, research your market. Figure out what really needs to be known about your market type. Know your customer base, how you're going to sell it, and your go-to-market strategy, because the only way you're going to sell it is for people to know about you, and I think people miss on that a lot. And then 3, make sure you're going into those meetings with the right team. Figure out who's going to make you better. Figure out what the roles are, and make sure there is a founder's agreement in there somewhere, because, so much is captured. There's personal relationships that are built, but business is business. And I think folks find out too late that they should have really been clear on partner roles, responsibilities, and who does what in a business, because that will bring you more heartache down the road if that's not fleshed out early on. So when you go into that meeting, make sure you know who you're going in with, everybody's role, and be ready to have that conversation.
No, that's great. So if I can summarize it, research, be prepared, and be smart.
There you go. Exactly.
Because I do tell people, we do pre-litigation business divorces, and they're not fun. Because a lot of times it's family or best friends that somebody hasn't been clear at the beginning on those arrangements of who owns what or who's doing what. And it just unfortunately is something that can be avoided if just put it down in writing. Get with your lawyer, put it down in writing. And then what's the adage we use a lot is good fences make great neighbors. Same thing with business, right? Business is business.
Absolutely.
When you're dealing with the team, put up those fences. Make sure everybody understands what it is at the beginning, because it's a long road.
Yeah, and doing it mid-flight is very, very hard when this company takes off. And put it in a positive light. We got to think of this stuff now, because when we're really getting going, this is going to tie us down and maybe distract us. So do it early on.
Great. Cat, thanks so much for being here. We're going to take a break here. We'll be back next week for part 2, where we talk more about women founders, Latina founders, and the unique challenges and opportunities here in our community. If you're watching us on YouTube, click subscribe for us. We'd love to have that. That just knows that we're out there providing value for you. If you're listening to us on Spotify, on Apple, on Audible, all those platforms, again, leave us a comment, subscribe to us, just so that way we know we're adding value, and we'll see you next week.